Good afternoon, everybody, wherever you are. Welcome in Hong Kong, Singapore, and in the UK. Certainly, we live in interesting times right now. Today, I'm going to talk about Portugal and Germany, where we see good opportunities to invest, following on from last month's UK market update. So let's get straight into it. So first off, a little bit of background to our business model. So IP Global set up here in Hong Kong in 2006. I've been in the business pretty much since the beginning. We are a research-driven end-to-end property investment company. We do everything from the research, due diligence. We introduce the client to a lawyer. We can help find the mortgage. We can do everything around the management side. And there's our sort of suite of offices we have. Head office here in Hong Kong, over 50 people here. And we've transacted around about $3.2 billion of property since we set up. Okay, so what are we up to this year? Well, we've already had a couple of successful launches in the UK. But today, obviously, we're going to talk about Germany and Portugal, opportunities in the Eurozone. So we're going to touch on Berlin and Leipzig and Porto and Lisbon as our markets for today. So the Eurozone. So obviously in the world we live in right now, there's some really great currency opportunities. I mean, if we look at what's going on with the euro to the US dollar and Hong Kong dollar, you know, we're talking about sort of 21% opportunity there. And with the Sing dollar as well, about 10%. So these are great sort of head starts for our clients when they're looking to invest in the Eurozone. There's a real sort of opportunity on the currency side. So let's start with Leipzig. So Leipzig is a new market for us. We launched in Leipzig this year. Had a very successful project. Leipzig is the fastest growing city by population in Germany. It's also a very beautiful city, as you can see there. More listed buildings than any other city in Germany. Very, very attractive city. So why Leipzig? So in effect, it's got amazing infrastructure. It's got a great railway network. It's got a great airport infrastructure, as I share in a second. Pretty much you get every which way, right the way across Europe, northeast, southwest. And that's obviously attractive for corporates that are based there. So airport-wise, it's got a great cargo hub, second largest cargo hub in Germany behind Frankfurt. By 2030, they're talking about Leipzig having the same population as Frankfurt, so huge amounts of population growth. And if you could go by train, it's 70 minutes to Berlin, 300km/h train. So really, really super infrastructure. And companies like DHL have made Leipzig their European hub because of this great infrastructure. So who's there in Leipzig? So they've got a great plan 2030, and there's a really excellent report I can send to you if you'd like me to, which really outlines every type of investment that's going on over the next 10 years. So from healthcare to biotech to logistics, media and creative industry, automotive supplies, and the whole basket of established companies are there. I think one of the interesting facts is when you look at, obviously, Leipzig, of course, it's a smaller economy than Berlin, but if you look at the GDP per capita, it's also very similar to Berlin. So there's a lot of wealth creation going on. Salaries are actually quite similar to Berlin, but property prices and rents are considerably cheaper. So there's very, very good affordability. And of course, that is very healthy for the property market. So here's our first launch. This project completes in July. It's pretty much all done. Very, very high standard of regeneration and investment in a really nice up and coming suburb in Leipzig. I think the point to make is, as a lot of you will know, we invest our own capital in these deals. We basically, whatever we don't sell, we have to buy. So we really go to the nth degree to make sure we try to bring the best opportunities. And this project is all on time for completion in this summer, and has sold extremely well. And we are planning 1 or 2 other launches in Leipzig quite soon. My colleague is just back from Germany. He went to Leipzig and Berlin, and we're actually working through a number of other projects from around about the sort of 200 to 250,000 euro mark with a 5% yield. The other thing to note is we can get fixed rates of 10 and 20 years up to a 2% interest rate. So very, very good on the cash flow with a very good yield. And of course the weak euro, as I mentioned earlier. Okay, so we just pause for a second and we're going to go across to Berlin. Berlin is a city that we know very well. We've been investing there on 13 projects now, and it's really just still such a super value opportunity. The whole sort of unification challenges and how long it took to get the East v West unification all sorted out has meant that pricing of property has lagged behind other tier 1 cities. So we continue to see really good opportunities in Berlin. I'm just going to share a little bit more on the market there. So what's actually going on in Berlin? So there is a population that's significantly growing year on year. It's a center of government, technology, education, and culture. Here's all the high profile corporates that you'll see. There's a very big tech side in Berlin. It's really a sort of a student mecca. Education is free in Germany. Berlin is the capital. It's a very attractive city and attracts a lot of other students from the Eurozone. So young people, they graduate, they want to go into the new tech industries, etc. And as a result, all these big corporates are growing, and sort of 67% of German startups are based in Berlin. About 2.9 billion of capital has already been invested and is continued to grow. So here's our most recent launch. So this is the most central project that we've done in Berlin. Right smack bang in the center. It's close to Alexanderplatz. It's close to Potsdamer Platz. It's actually in the heart of the embassy district, Chinese embassy, Australian embassy, South African embassy, etc. And it sits very, very close to a U-Bahn station, Heinrich Heinz Strasse. A really high quality developer. We worked with this developer before. So we believe this is great pricing we've secured. So these are very small units that are very popular in Berlin. We know that because we've done 3 of these projects before. They rent well because they're affordable. So really will suit the young professional. So from 210,000 euros, you know, in arguably the capital of Europe, we see this is an excellent opportunity for our investors. Okay, so that's Germany, and happy to take 1 or 2 questions on that at the end. As some of you will know, we launched our first project in Lisbon last year. Yeah, really a beautiful capital city of Portugal. I'm going to be showing on Porto as well in a second. Portugal was very late to the sort of recovery from the financial crisis and went through a lot of pain during that period. And as such, is in a really, really good shape now, given the fact that a lot of the debt has been removed. From a property perspective, oversupply has completely disappeared. Population is growing through various incentives. So the market is in a very good spot right now. And now, if we take a look at the property market, we see before the financial crisis, there was an absolute sort of glut of property on the market versus actual residential sales. And then if we look at in the most recent years where the property market has become extremely well regulated, banks have been very regulated, it's very, very difficult to get planning, property licenses, etc. So very little stock has actually come onto the market. But the demand is there. People are buying property, they're buying trading property in the secondary market, but there's a real lack of new supply coming on for the ever-growing population who are in Portugal for the tax benefits, golden visa benefits, etc. So the undersupply versus a population growth and all the investment puts that market in a really good place for upward pressure on rents and prices. So what's going on in Lisbon? So it's a very diversified economy. There are technology companies, there are legal firms, there are accountancy firms, there are banks. There are lots and lots of different retailers there as well. So very diversified. And lots of these companies they have big offices. They are not sort of sub offices, small offices. So when I stayed there with my colleagues, we stayed around where the KPMG office is, and that's quite a big office there, and PwC, and Linklaters Lawyers are a big legal firm here in Hong Kong. They are a big institution there, and the whole market is littered by these very lovely old quaint type buildings. But you know, Lisbon is a very compact city. It's very compact. It's only 7 kilometers from the airport, so there's not a lot of land to build on. And again, it's difficult to get projects. You know, we've only done a couple there because of the tight supply. You know, we've identified some really good opportunities, and these are some of them. So last year we launched the Carvalho and the Bella Vista projects that have sold very well, and also critically are progressing very well. So as I shared with you, you know, we put our own capital into these, we underwrite, we're aligned with our clients. So it needs to be high quality. So the Carvalho is progressing extremely well. It's on track for completion at the end of December. We keep regularly in contact with our developer partners. The Bella Vista was actually due to complete, I think, about October, November. That's actually been brought forward to the summer, and again shows you the sort of quality of the developers that we are working with. Indeed, we've probably spent about a year on the ground before we got to these first projects to make sure that we were confident with these developers. And then upcoming opportunity, we have a really nice opportunity on the water side, which is coming soon, which I'll just share some details here with you on the next slide. So there's a project that is 3 kilometers from the city centre, 3 kilometers from the airport, a really big project of apartments designed by one of the architects who worked on the Shard in London. So really high quality, award-winning buildings. There are restaurants there, there'll be local shops, offices, art centres, a whole sort of communal living in a high quality location. Interestingly, 80% of the units have been sold to Portuguese. The most expensive unit here is about 1.9 million euros, and we will probably have sort of about 10 units at around about the €500,000 mark. So perfect for those clients who are perhaps looking at the golden visa opportunity. And finally, and last but not least, Porto. Again, I was in Porto last year with my colleagues. I didn't really know much about the city before I got there, but absolutely beautiful city. We actually took that photo and sat down by the waterside there and had some cheese and port, which was really great. But that's the sort of emotional side. But from an investment side, you know, it's clearly Lisbon's the capital, but Porto is a close second. It's the student hub of Portugal. There's 74,000 students there. And again, there's a highly skilled, educated workforce there. And again, it's no surprise there are so many startups there. There are also the banks. There are also lots of fintech, biotech, lots and lots of different new industries there. Lots of job creation going on. Emirates are flying there from 4 times a week. And again, clearly a city on the up. So the greater population is around about 1.3 million. As I shared with you, there's a number of growth areas, so technology, health, energy, environment. They're the sort of key industries that we see. And some of the key companies, the usual sort of favourites, Amazon, PwC, you know, BMW, KPMG, Farfetch, the online retailer, a €2 billion company retailer, started off in Porto. And it has a strong presence there. There are over 370 businesses in Porto now, and it's responsible for around about 40% of the export market of Portugal and about 30% of the GDP. So transportation-wise is definitely a big benefit for Porto. So myself and colleagues, we took a train up from Lisbon to Porto, 2.5 hours, very efficient, very clean, Wi-Fi. In terms of the metro system, I would arguably it's better than Lisbon. Lisbon's still very good quality, but we went on the metro system in Porto, very good, extensive network, and very cost effective. The airport wise, you can get to every which way right the way across the globe. I mean, Porto is a ex-colonial power, you know, with obviously lots of links to Africa and South America, and hence why there's an extensive network and is extremely well connected airport across the globe. So here's our project. We're launching this next Monday, 18 units. I actually went to this project again with my colleagues, really like the location. It's a waterside sort of town of Matsinos. We walked along that beach at the bottom there and had a meal in a restaurant with my colleagues. Really attractive location. The project we have is just set back from the waterside. There are lots of nice new smart apartments coming up, lots of old commercial warehouses being taken down. So this project offers a perfect mix of literally a 10-minute commute into the workplace in Porto and all the thriving industry there, and then a great place at the weekend to relax. Interestingly, this project is 66 units. We've actually secured 18. There's a lot of the units that have been sold in the local market, which is what you see across Portugal quite extensively. Mortgage rates around about 2%, lending up to 70%. We're talking about 300 euros per square foot here, which we think is really good value, and around about sort of 5.5 to 6% yields. And the developer is a 75-year established developer, so they've come through all the sort of major crises over the years. A really high quality developer. So it's really great we've got this opportunity. We launch it next week, and certainly for those of you interested, I can share the details. Okay, so let's just round it up there. I mean, the next slide is just a summary of what we have upcoming. So we have some opportunities right the way across our markets. So new market of Glasgow coming soon, from about £160,000 and a 7% yield. New opportunities in Birmingham, given the fact of the HS2 link that's finally been given the green light. And also we're currently working on new Leipzig, and as I shared with you, Porto and Lisbon to come over the next couple of weeks.